Hello, Maverick traders. Welcome out to your market roundup, December 20th. Corey here with you. Nice to see all of you, and let's jump into it.
We are excited to announce the Maverick Trade Collective. Our exclusive program offers you a unique opportunity to immerse yourself in the world of professional trading. With the Trade Collective, you gain access to a vibrant community of traders and an exciting real-time trading experience. Joining our elite group means you'll be witnessing seasoned traders in action, learning the art of portfolio management, and mastering advanced basket trading option spreads. The Trade Collective will trade a real-time portfolio, entering trades weekly and manage them in real time with the collective group. This is a window into professional trading, where expertise meets collective success. The Trade Collective starts January 2nd for all Maverick traders. Invitations will be made via email at the end of December. We are excited to bring a live, real-time trading experience to Maverick traders.
All right, so by way of intro, the Trading Collective launches at the start of the year, and that's right around the corner. Hard to believe we're already approaching January. So it's going to be, we'll send out trade setups over the weekends, and then on Monday we'll have a live meeting to talk about those setups, place orders together, do it in real time, and then on Friday there will be an update because now there's expirations every single Friday. That'll be kind of here's where the trades are and here's how to manage those, and we'll go from there. So it's going to be a fun learning environment, a fun opportunity for people to get a glance into how we trade as professional traders and our insights into markets, so on and so forth. So come and join us. Now, market analysis, let's talk about what's happening here. So the Dow is down 1.2, the S&P down 1.5, QQQ, Russell was the underperformer, down 2.3, but it was a sell-off day. Now, this was on the back of a 9-day winning streak. So really, we only gave back a couple of days worth of upside, but it was sort of just one of those things where as soon as there was a little selling, you have to imagine that people were levering up and kind of aggressively getting bullish. And so all it took was just a little spark to really get those weak hands, those that were not willing to hold for too much, to sell. And that's kind of just, this is the knee-jerk, the quick in and out type of traders. They bailed on this market. So I don't think that it's anything too major that's going to cascade lower for the rest of 2023 or something like that. But it bears some watching. We could certainly correct a little bit further. FedEx missed on earnings, and that was part of the negative vibe that came into this morning. Advanced decline line, 75% of stocks declining today, and the 50-day moving average has given a little ground. We were above 80% of stocks above their 50 MA. Now we're at 78%. So the trend of that can kind of lead you to, okay, a little bit of a bearish turn, a few stocks weakening, still a bull market, but it bears some watching. If we look at the S&P, it's just been on a run. The seasonality, all of these things really set up for a market rally into end of year. I mentioned this, that one of my best trading calls was really this idea that towards the end of October is where, if the markets start to go, it'll really feed off of itself. And there's a seasonal pattern there, but it was also just kind of a recipe where negativity and pessimism and so on were really set up well for that. And we just had a nice end of year rally. So where do we go here in the very short term? I would look at the calendar and suggest that my best guesstimate is that we don't do a lot of anything. And my best estimate is that about a week from now, we'll be around these prices still. That would be my estimation of what's going to happen. Again, we're going into some market closures. Market close next Monday. Volatility and just total amount of traders will die down, is the tendency around those major holidays. Now, if there was some major news event or something, that would all change, but really there's nothing scheduled on the economic side of things. If you look at next week, it's nothing, right? Nobody's reporting earnings next week. There is no economic numbers. They all come out in advance of these major holidays. So that's why you tend to get kind of a quieter market environment. It can be pushed around on low volume, but really you tend to spin your wheels and not really go anywhere. The QQQ looks much the same. We've obviously been in an upward advance. We pull back a little bit today, but nothing to derail the market's advance overall. We're still in that upward trend. So as we look at the heat map, a big sea of red. You have a few outperformers, Google, CVS over here, Cigna. There's a few green, but mostly red, and mostly, the 1 to 3% range is pretty much where the majority of stocks land. So again, I think this is the weaker hands, those that were just kind of piling in. All it was going to take was a little bit to scare them out. And so you saw that's the way momentum works is, well, they weren't committed. They're not long-term investors. They were just playing momentum. And so as that momentum started to turn, there was a little panicky selling right towards the end of the day to get them out and make sure that they're not stuck in a position into tomorrow where we could gap down or something like that and it could get worse. Overall, still trending higher, but obviously we were in need of some sort of correction. That's what I would anticipate happens here for the next while, is that it's just choppy behavior and relatively sideways. Now, as far as bullish, bearish, neutral ideas, I've got a couple of names that I think could be interesting. I'm going to start on the bullish side with DraftKings. Now, DraftKings really needs to hold right around these levels. This was, you can see the huge bullish candle, first of all. This was the big breakout. And now you've corrected back down, and I like these these types of corrections, where it's a three wave. If you follow Elliott wave, it's just, hey, corrections often happen in an ABC type of pattern, where it's nothing that derails the trend. The trend is still intact if we hold at these levels. So this is a good risk to reward play for some stabilization. Now, if tomorrow you come in and you're just breaking the 50 MA and you're gapping down, you don't take the trade. If it holds here, it kind of forms a bullish candle, starts to move back up, there's a very good chance that when you see this type of pattern, that it can play out. And if it's even 40, 60, if it even works 40% of the time, because your reward to risk is so much in your favor. I mean, if we're wrong and it breaks this 50 MA, you're talking about small risk. $1, $2 per share multiplied by your option trade is just not a huge risk. So you could have some sort of stop out point or something like that. Now, if you're just a set it and forget it spread trader, again, you could have a 2-to-1 type of reward to risk ratio and something in the variety of a bull call spread, something that gives you upside profit potential, and your break even would be like this on the risk graph, where your profit area is probably 2 times what you're risking, something like that. So I would position it, maybe 39 is your upside target and you're buying a 36 strike call. You're getting a $3 call spread. You're probably paying $1 or so. So it's going to be close to that 2-to-1 type of number. Now, if we look at Nvidia, this one stalled out at the upper level of resistance. So you can see this area of resistance that we basically retested, but notice the bigger drop here, and what I would anticipate will be a shallower drop here. So tomorrow, maybe even gap up or start to work your way higher. I would anticipate that Nvidia can have another push to the upside, a break above 500 and that level. You could be all the way up towards 540, 560 in a heartbeat with this type of name. So again, I would need to see some stabilization here to be willing to put on some sort of spread or something like that. But if it happens, I think it's a good risk to reward candidate as well. On the bearish side, I'm really not trying to overthink it too much. What has been negative and probably still will be FXI type of names, and that's China. China has underperformed year to date. China has underperformed in the short term. This is Alibaba, symbol BABA, and just looks like it could be poised for another drop. Nothing too special about it, just maybe a push down into the 60s again. And then also energy. Now, I mentioned I did the market roundup about a week and a half ago. It was not this Monday, but the Monday prior. And I talked about that I was kind of off of the XLE short. I was kind of off of, hey, let's let this thing bounce a little bit before we initiate more energy shorts. Well, we've gone from this 82-ish level up to 85 or 84 or so. It's nothing too major, but I suspect this is an area where, again, I'd come back to this sector and say, perhaps this is an opportunity. The trend is still lower. We were probably smart to not push the gas and try to keep shorting them down at those lows. We let it come in, probably a much better probability of success, much better risk to reward for some sort of bearish trade. And here you can think in opposite terms. You could basically put on some form of bearish put spread where, again, your break even comes in here, but your risk would be 1 times and your reward might be 2 times, something along those lines. So bearish spread trading in the energy sector makes sense where I'm standing. Markets are pausing near that all-time high. In the S&P 500, we were up near that 4,800 level. When the calendar flips over, you could start to see the January effect take place. And that's a taxation thing where a lot of people don't want to sell their winners because they'd have a tax bill. So you want to hold off on selling your winners in 2023. But as soon as 2024 hits, if you want to sell some of those names, you go ahead and sell and take down your share count. But you have to do it in the next calendar year to avoid paying taxes upcoming. So the January effect is basically that the strongest stocks can underperform when that calendar flips over. And we'll see if that plays out. But it again, the seasonality for it and the way the markets have behaved, it really sets up well for that. So large cap tech, something like Nvidia could certainly underperform as you get into January timeframe. So that's why I was thinking, if I'm playing Nvidia, it might be a little shorter term trade. Maybe even take my targets down because it's certainly vulnerable to that sort of January effect as you get into the April or the January expiration cycle. Final GDP on Thursday and core PCE on Friday. And by the way, that pretty much wraps up the economic reports for 2023. There's not too much that comes out around Christmas or even into New Year's. So this is the finishing touches really on the economic news for 2023. Earnings are also winding down. You have Carnival Cruise, Nike, but again, it's pretty much coming to an end. Hope you enjoyed this. Have a great holiday season. We will see you in 2023 still with additional videos, but have a safe and happy New Year. A Merry Christmas. Great to be with you. We'll see you next time.